Franco Davis, Finance Director at Barclays Bank, joins us now to discuss the state of the banking sector and what opportunities there may be. Good to have you with us, Franco. Maybe if we can reflect on the overall banking environment on the continent, are there signals of fragility or opportunities for a boom?
Yeah, definitely. I think about emerging markets in Africa and Mauritius as well, there's lots of opportunities for growth. I think if you look at what has happened lately on the market, actually, with Moody's being more stringent on some banks, you may think that there may be some issues, but absolutely not. I think it's a short-term volatility issue, whereby we're having some downgrades due to the banks having restructured. In fact, making them more strong because they were distinguishing between their banks and their non-bank activities. And this has resulted into some lower capital being held by the banks themselves. But the capital is still there. It's held in the holding companies. So I think Moody's action, why justified, is more based on that restructuring, which is something good for the long term. And clearly, the fundamentals of the banks are very clear, are very clean. We are good double digits return on equity, around 13, 14%. The banks in Mauritius have a good cost-income ratio, below 50%. And we have a well-diversified strategy. Banks in Mauritius operate more in both onshore market, what we call onshore domestic market, and also in the African and offshore market, Asia and Africa, tapping into the corridor between Asia and Africa. And clearly, there are many opportunities. The emerging markets, actually, if you look going forward, and even presently, the emerging markets growth in terms of GDP is double that of the developed markets, right? And the expectation, all the analysts predict that, for example, in Africa, the exposure to private sector will double by 2020. Emerging markets growth, including Asia, Africa, and all the emerging countries, will grow by around 50% from today to around 2019.
Franco, thanks for that insight. But clearly things are changing rapidly. As you know, many of the emerging markets are dependent on oil exports, and we've seen what's happened to the oil price. But something I'd like to know from you is what is your relationship with Barclays Bank in the UK and indeed with Barclays Africa?
Yeah, actually for Barclays Mauritius incorporated a subsidiary last year. We were a branch before that, so we were a branch of Barclays Bank PLC UK. We are still 100% owned by Barclays, actually, the subsidiary. Actually, what happens is that a part of the Africa strategy for Barclays, Barclays have grouped all its African subsidiaries together under the ownership of what we call Barclays Africa Group Limited in South Africa. So we now all report into Barclays Africa, who's in South Africa, actually. And all of us actually have a one Africa strategy. And Mauritius is actually well positioned for that because, as you're aware, we have a very good financial center here. We are regarded as an international financial center here. And Mauritius, therefore, is a key point toward investment into Africa and to bridging that gap between the Asia market and the South African and the African market as well.
Franco Davis is the Finance Director of Barclays